Hey, what's up, everybody? It's Doug Shoemaker here with the Shoemaker Loan Team with your weekly market update. And for my friends out there who just want to know what time it is, here's your Cliff Notes version. The Fed did cut rates by 1/4% for the first time this year last week, but mortgage rates actually ticked up a little bit. Now, builders are cautiously optimistic, but new construction did slow down a little bit in August, and retail salespeople, it came in hot. No, that just means that we're all out there spending too much money even after things have gone up by over 30%. Remember, everybody, that inflation is one of the number one drivers of mortgage rates going up as high as they went. So if things are this expensive and we're still spending like crazy, we're not giving the Fed a whole lot to go on in terms of needing to cut that Fed prime lending rate. This piece is in our control. Now, jobless claims also dropped after they spiked recently. Remember that spike in jobless claims, that's actually what gave us the lower rates that we've got right now. But the labor market does still look a little bit shaky. So we'll be watching that pretty closely going into October. Now, again, for the most part, rates went up a little bit last week, and we did also get an alert to lock today. So if you're closing the next week or so, you might want to consider talking to your loan officer about what treasuries and the bond market are doing, because I do think that now would be a good time to lock if you're closing in that short term. Now, outside of that time frame, I'd probably consider floating into the next jobs report into October, just to get a gauge of where that's going. Because if that labor market does show additional signs of weakening, that could be good signs for mortgage rates. So, for all of you that like to know how to build the clock, let's go ahead and dig in a little bit deeper. For my people who just want to know what time it is safe to move on about the cabin. So, for the clock builders, the Fed finally pulled the trigger on its first rate cut of 2025. And that lowered the Fed funds rate by, of course, 1/4% to a range of 4% to 4.25. Now, why did they do that? Well, they're juggling two things: inflation that's still a little bit sticky, and a job market that's showing some cracks. So, one Fed governor actually was pushing for an even bigger cut. He wanted to do a 1/2 point cut. So keep in mind, the Fed funds rate is not mortgage rates. It's the rate at which banks actually charge each other overnight. So it does ripple through the whole economy, but the Fed funds rate, mortgage rate's not the same thing. So here's the bottom line: the Fed is actually trying to walk a tightrope between inflation and jobs, and there's just no risk free path to that. So projections are all over the board. Some Fed officials see no more cuts at all this year, while others see up to five more 1/4% cuts. Now, core inflation is still expected around 3.1%. Unemployment is actually forecasted to tick higher, and GDP growth got a tiny bump to 1.6%. Now, in builders' confidence, that stayed at 32, which is still below the growth level of 50. But their outlook for the future sale actually hits a 6 month high. So here's the translation: they're not celebrating yet, but they're pretty hopeful that lower rates are actually going to bring more buyers back into the market later on in 2025. Now, after a really surprising surge in July, housing starts fell to 8.5% in August, and those permits dropped to the lowest levels in 5 years. Single family homes that are already under construction are at the lowest level since 2021. Now, the US still needs more homes to meet demand, and if rates keep easing, demand is only going to grow. So, builders are going to need time and cheaper financing to get caught up. Now, retail sales jumped zero point 0.6 in July. That's actually triple what was expected. Stop spending, people. The control group that actually feeds into GDP, that grew even faster at zero point 0.7. So people are still spending despite higher prices, and especially online on clothing and back to school gear, stuff like that. Now, new unemployment claims, they fell by 33,000 to 231,000. That's a good sign after the recent spike that we saw a couple weeks ago. But continuing claims have been above 1.9 million for 17 straight weeks now. And that just means that folks are having a really hard time finding new jobs. So, hey, who's ready for the family hack of the week? So, want to celebrate National Key Lime Pie Day? It's actually coming up on September 26th. So, the Pioneer Woman's recipe is a really, really easy win. Now, don't worry, I'm going to drop that recipe down in the description for you below in the notes. But I'd also appreciate it if you dropped one of those things off for me because I don't have time to make one. So here's what to watch this week. It's definitely a really big week for data and possibly some market movers. On Wednesday, we've got new home sales. Thursday, existing home sales plus jobless claims plus GDP's final reading will be out. And then on Friday is the big one. That's PCE, the inflation report. It's the Fed's favorite measure of inflation, at least. Now, for the technical picture, this week mortgage bonds are stuck in a wide range. Support is at the 25-day moving average. Resistance is at the 101.31 level. The 10-year Treasury yield, it's testing 4.126. And if it breaks above that, man, it's got a whole lot of room to climb even further before hitting its next level of resistance. And remember, folks, mortgage-backed securities we want to see go up. Treasuries, we want to see them hold where they are or see them go down in terms of getting the best mortgage rates. So anyway, that's the clock, folks. I'll be keeping my eyes on rates and housing data and inflation. I'll be watching all that stuff for you guys. So if there's anything big that jumps out or a big surprise that happens, I'll get some more information out. Now, if you're thinking about buying or refinancing, or you just want to know what these moves in mortgage-backed securities and treasuries mean for your mortgage strategy, reach out to me. I'm always happy to help. Hope you have a wonderful day, and I'll see you next week.